the most recession-proof asset in real estate. What's up, everybody? My name is Jay Helms. I'm a real estate investor, and today we're going to talk about self-storage and why you and I should have it as part of our portfolio. This is Sparta! I think I scared the kids with that one. Hey, what's up, everybody? My name is Jay Helms. I'm the founder of this podcast and movement known as the W2 Capitalist. Today, as always, surrounded by and have a guest, and he's a very special guest, Mr. Ryan Gibson. Ryan is the CEO and co-founder of Spartan Investment Group. He has grown his business to over 5,000 units and 30 plus employees. We're going to talk about how long it took him to get there in just a moment. But Ryan has raised over $30 million from investors for real estate projects ranging from ground up development to cash flowing self-storage facilities. Ryan's company focuses on providing investment opportunities for individual investors in the commercial real estate space, primarily in self-storage. Ryan is also an airline pilot by his W-2 ways, right? And graduated from Mercyhurst University with a bachelor's degree in business with concentrations in marketing, management, advertising. In his free time, he enjoys spending time outdoors, which I am completely jealous of the stuff he's putting on his Facebook feed, with his family in the Pacific Northwest. And he also serves on the board of trustees at his alma mater. Ryan, welcome to the show.
Thanks so much for having me, Jay. Excited.
I typically invite people on here that I want to know something about how you got successful, right? And I know very little about self-storage other than I own a unit. Every time we go in to rent a unit, our plan is we're going to have it for that stuff there for 3 to 6 months. And then 3 years down the road, we're like, hey, do we need to get rid of this stuff yet or whatnot? And then another 3 years goes by and we just move it to the next self-storage facility if we happen to move areas. But in my mastermind group, there is a young lady there, Masha, who is an aspiring self-storage real estate investor. And she's new to the game, but she wanted to kind of get out of her comfort zone. It's like, okay, present to us. Make a presentation one Thursday night. She presented to the entire mastermind group. And she did an amazing job, by the way. And when at the end of her presentation, I was like, all right, do you have a deal lined up yet? Because this sounds way too good to be true. I want to invest in some self-storage. So then when you and I are going to talk, I was like, all right, this is going to be some good stuff. So nice. Let's just start at the very beginning, right? You're an airline pilot. You still are. But you've been building for how long now to build up to 5,000 doors or 5,000 units?
So technically we started in like 2013. Okay. It was like 99% W-2 and like 1% working on the business. We were actually flipping houses and
okay.
Yeah. And, at the time, airline pilot, pretty good gig. And then my business partner, Scott, had a nice job at the government. So anything we did was just high standard, high profit, didn't have to do anything. We didn't sort of have that, give up everything we're doing and jump, full feet in. And, it was kind of like, hey, let's be well capitalized. Let's think about the deals we're doing. Let's write a strategic plan. Let's make sure that, we don't just dive into this thing and it falls apart. And then we, give up our good W-2 job. So I know that that's counter to a lot of philosophies, like cut the W-2, get it out of your life. It's dragging you down or whatever, but
not my philosophy, but that's okay.
Maybe. Yeah. I like to be conservative and make sure that I put food on the table and things like that. So
you and I too. I am talking to Kim Daly, who's on the show recently about becoming a passive franchise owner. And one of the things she makes us go through is your risk tolerance, right? And one of the exercises. Yep. And she goes, why are you so conservative? And I was like, you mean, have I ever filed for bankruptcy or had any kind of credit issues? She goes, yeah. I said, no, I've always been this way. I don't know why, but I imagine it's part of my upbringing. But I agree with you. If you have a W-2, what I preach here as a W-2 capitalist is you build up that passive income so you can work or not, right? And guys like you and me, we're getting to that point where we don't have to work because of what real estate investing has done too. Now we've gone different paths, right? I've stayed with residential when you're in the self-storage area, and there's such different asset classes. I want to make sure that's why I'm so intrigued to talk to you today is what, you know, how you got to where, and I think you're probably a little bit further along that line than I am, and want to make sure if there's something I'm missing out, like how do I know, how do I know when a good storage facility opportunity comes up and what I should be doing and what I should be looking at, right? As a newbie, as a beginner in the self-storage space, right?
Yeah, it makes total sense. And that was our journey, was like, hey, we've got our W-2, but we want to make this full time.
Yeah.
And, really what it took was you work your day job and then you work your second job, which is building a business.
Yeah.
And I think having an employee mindset and having that edge has been helpful, because a lot of times when we're talking about our business, we're talking about, hey, well, at this company we did this, or this company we did that, and that worked, that didn't work. We really didn't like the environment, at our last company because of these policies. Let's not build a company with those policies. Let's do what we want, what we want to do. Right.
Yeah.
So I think that really, it helped. And then having the steady income is important too. So I do think, there's probably people that are listening that are like, well, you can make so much more doing the real estate than you can the W-2. At what point are you costing yourself money by having the W-2 still? And that's true. At some point, you do got to constantly make decisions in that regard. But, I think really for us, we looked at the best recession resistant asset class in the last 2 downturns. So we studied the market, and storage was the best performing. Storage and medical office, actually, in the last 2 recessions were the best. And then we thought, okay, does it meet our criteria, which is easy to own, easy to evict, and easy to operate? So those were the things that we wanted in our organization, so that, because we do all the property management, asset management, construction management, capital raising, acquisitions. So we wanted to be able to do fully integrated. So what we wanted is a asset class that allowed us to do all of those things. And that was storage. Storage was something that we landed on.
Yeah.
But to answer your question though, a good one has a lot of demand. And the demand isn't, what you think or what, the broker is trying to tell you, but it's what the market study tells you. And that's really what drives, a good property, and then is the property price right? And then what's the opportunity in the business plan to execute it?
So when you say market study, what does that actually mean? Like, does that mean
so
like you hire a third party vendor to go out and look at some different numbers and stuff? And then what kind of information do they bring back to you? And I'm assuming you have a checklist to say, okay, well, this passes, this fails. And at some point in time, you gotta, just like we're talking about our W-2, you gotta either pull the trigger or not. Right. So what are some of the things that anybody's going to see in a really good market study?
They're going to see saturation rates. They're going to see demand. They're going to see population. They're going to see unmet demand of square footage. So, the easiest example I can give is just imagine within 10 minutes of a property, there's 200,000 square feet of unmet demand. That would be a phenomenal demand metric if you're buying an existing property that maybe has under market rents. The rents are supposed to be $100 a month and they're currently at 70, and everybody's full. And then there's a unmet demand of 200,000 square feet with no other people building in the market and no other facilities coming online. That could be a great study. And that's really the only thing that matters. I mean, it doesn't matter how many millennials or baby boomers or anybody, it matters what the raw numbers are for that particular property. And it doesn't matter how the macro market is really doing. I mean, that definitely factors in, but it's storage is a 10-minute drive time, because you're not going to your storage property 8 hours across town or, an hour across town. You're going to go to the one by your house. So it really depends on what's going on in the local market.
Gotcha. And you said 10-minute drive time. I also heard like the 5 miles of your house or 5-mile radius. And as I'm sitting here, I'm thinking there are 4 or 5 facilities, and we don't live in a big metropolitan area. Now we do live on the coast, and A lot of people rent their houses out for tourists and whatnot, so they probably store a lot of their personal belongings in a self storage to only to use when they come down or whatnot. But there are, I think, like 4 or 5 self storage facilities right here within. Of course, we have one unit in probably the smallest complex. I call them complexes. I don't know if that's a
Yeah.
proper term, but
Facility. Yeah.
do you think there's ever a chance that the self storage market is going to get saturated?
100%. And in
Yeah.
most markets, that's the first thing we're looking for.
Okay.
So we try to kill a deal as fast as we can, and saturation is the biggest thing that will kill a deal.
I gotcha.
So
okay.
in Denver, there's some areas of Denver where there's 1 million square feet of oversaturation.
Oh, wow.
Yeah.
Wow.
And Austin, Austin's a great market for a lot of different things. For storage, it's one of the highest foreclosure rates. It's overbuilt in general. Now, doesn't mean that there couldn't be a street, a main in Austin that makes sense, but generally that's, a market that's oversaturated.
And when you guys are looking to acquire, at least your current strategy, amongst this whole COVID era or whatnot, what are you looking? Are you looking to build from? I know you've got some projects going on, but primarily, are you looking to build new facilities, or are you looking to overtake existing facilities, or is it just one of those things where it depends on the numbers, right? And what's your strategy right now?
Yeah, all the above. So we typically, our bread and butter is we buy a property that has existing cash flow. So the investors get cash flow day one. And then we have land to expand and a market study that says that if we expand, we can fill up those additional units. And then so we'll buy the property and we'll do some operational improvements to it to raise rents and make the facility perform better. But then really the expansion is kind of where a lot of value is created. We have built from the ground up. We like to only have a few of those in-house. Right now we have quite a lot of construction. We have close to $30 million of construction in progress.
Wow.
Because we're building a manufactured housing community. We're building we're doing 2 adds to self-storage facilities, and then we're building a ground up facility from scratch. So we do have a lot of construction at the moment. And so, we look at adding more ground up development when we sort of feel comfortable with where our current construction projects are at. So we're actually just about comfortable adding another one, but the cash flowing properties, we're adding those on a more regular basis because, there's not as much risk. I mean, there's always risk, but those are, when you have an in-place business with in-place cash flow, it's way, you really take a lot of the risk out of the situation.
Yeah.
The reward goes down, but also the risk goes down. Yeah.
Yeah. It's a hand in fist, right? Or whatever that saying is.
Yeah.
You mentioned in Denver, there's over 1 million square feet of, it's oversaturated by 1 million square feet.
In some places, yes.
In some places.
Yeah.
How does that happen? It's just because there's other developers out there that don't look at the same market studies or have a different risk tolerance or think things are going to go expand a lot quicker, or how does that happen? And then how long is it going to take for those to fill up for you guys to start looking in Denver? Does that make sense?
Population is the number one driver.
Gotcha.
So, I mean, if you have increasing population, eventually it'll catch back up. But
and Colorado's, Denver specifically, I think, has had a lot of that here recently.
They've had a lot of growth. But how does this happen? I mean, I don't know. It's a great question. I guess people just don't pay attention to the overbuilding. They don't look at permits in the pipeline. We at Spartan, we have 3 full-time people that all they do is look at market. They're analysts for business intelligence. So all we're doing is we have a director of business intelligence, and then we have 2 supporting people to her.
Okay.
And so this is the number one thing for us is we
That's
spend
awesome.
we spend a lot of time looking at data, looking at making sure that we're not going to put the property in the wrong spot.
Yeah.
Or buy a property that won't enable us to complete our business plan.
Yeah.
Now things change. People could build after we come in or something like that. But again, we would be analyzing that as a risk in the beginning. But we always look at permits in the pipeline, applications, the ease and the considerations for how easy it is to build up a property behind us. Like we have a property in south of Seattle. It took us 4 years to entitle it. and that's just coming out of the ground now. So while there are no other permits in the pipeline, even if there was, you're talking about a huge runway of time before, you go. The other thing is if you're building next to somebody building, that's a very difficult situation to be in versus if you already have your facility and it's fully operating and functioning and somebody builds next to you, it's going to sting a little bit maybe in pricing and stuff as they lease up and they really want to get all the customers. But, if you're building side by side, that's a problem.
Yeah.
So you definitely want to go into a market knowing that there's no one else building around you, or within your footprint.
When you say entitle it, what does that mean when it comes to self-storage?
So just like any piece of property, if you just found,
is that like a certificate of occupancy for residential?
No, not quite example. So for example, if you were to just define a forest, vacant land, and it was zoned, a certain way, and you had to get like a site plan approved to build a neighborhood, right? You would have to get the entitlements for that.
Gotcha.
Now, once you got your site plan approved and you got all the entitlements and you've cleared it with all jurisdictions, then you'd go to the city and you get your building permit. And that would allow you to go vertical and actually build what you're setting out to put there. Wow. Then you'd still get a certificate of occupancy once the building was built and signed off on by the jurisdictions, fire and city and everything like that.
Yeah.
Then you'd get your C of O so that you could open your business just like a residential.
Gotcha. Okay. No, that's awesome. I didn't know that. So it took you guys 4 years. Did you acquire the land and then get it entitled to be able to build on it what you wanted to, or was that part of your offer in the purchase of the land?
Yeah. So sometimes we do both. So sometimes our contracts are contingent on either site plan development or building permits.
Gotcha.
Sometimes they're not. It just depends. Sometimes we get a certain comfort level with the rezoning process or the building permit process that we can close on property. But certainly there's a certain period of time that we have to take the property through. It's like geotech, where you bore holes in the ground and you study the soil, phase 1 environmental survey, title review, things like that, where we have to do those things before we close. And in this case, that property that I gave you an example of, we had site plan approval and zoning approval to build what we wanted to build before we closed on the property.
Gotcha.
Yeah, because the building permit process sometimes isn't that. It takes a while, and there's definitely some coordination, but it's typically not the difficult part. It's the entitlement it's everything that comes before that is usually the more difficult.
And I want to apologize to everybody who's listening right now. I told Ryan when we first started recording this, I wanted to keep this a one-on-one discussion, but I will quickly dive into questions that I want to know about. So that's one of those things. So if you're listening as a newbie, hang with us. We're about to get off this topic.
No, you're fine.
So that's what I mean, right? You're supposed to give me a caca or something like that, a sign that, hey, man,
no, it's just a couple of guys catching up and learning about. True. Yeah, no, it's good. I like it.
I love that you brought up, y'all have 3 full-time employees that focus nothing on market research. And if you're listening to this or watching this, and if you haven't visited Spartan-investing.com, there'll be a link in the show notes. But I was telling Ryan that is it, what is it, Spartan-investors? Yeah,
Spartan-investors.com. Yep.
Yeah, I have it right in front of my face. What did I say? Spartan-investing?
I think you said investing. Yeah. It's all good, though.
Anyway.
Yeah.
I'm not going to cut that out. I'm just going to show you guys how I'm.
I like that raw. Yeah.
So Spartan-investors.com. Let me make sure that's the right. No, you guys have recently revamped your website, you said, and money well spent, because it was super attractive to me. The map you guys have on there about where you invest and whatnot was super appealing, right? I mean, even I signed up to be part of your list. I want to know when the next available opportunity comes up. But it now makes sense that you guys have 3 full-time employees just on market research, because you're nationwide, right? You're not limited just to Pacific Northwest or just to Texas or anything like that, right? Y'all are nationwide.
That's correct. Yep.
Yeah. So because I'm sitting here thinking, man, on my calendar, I have blocked off like an hour and a half each week for market research. Now, I only invest in, or right now, I'm about to change because of everything that's going on in Florida just because it's, talk about oversaturated with
Yeah.
buyers who have more money than they do sense. Um, I have to give credit. That is a line from a guest on the show recently.
I like that.
He's gonna kill me because I can't remember his name right now. He's gonna kill me when I say this. I just saw him on Facebook too. I'll circle back around that in a minute. I'll look it up. But you know, one of the things, so I kind of limit an hour and a half each week for that. But it's one of those things where I've been in this market for 10 years. There's not much new that I don't know about, right? I'm not trying to go out and find new areas and well, I'm about to, and maybe I need to increase that time, but I love that you guys have 3 full-time employees. So that's, 120 hours a week that you guys are dedicating to that, where I'm sitting here an hour and a half. I'm like not even doing barely even, not even a half. Was that on 1% or 10%?
Right.
That's 1%. But yeah, it's one of those things where you put the time in up front, you do all the planning. It's very much more appealing for me to partner with somebody like that than somebody who just, looks at things and has a gut reaction to it, or a gut feeling, right? Which is part
Right.
of it still, I'm sure, right? You check
Yeah. I
with
mean,
those
there's
fundamentals.
definitely, yeah. I mean, it's very small part of it.
Yeah.
I mean, I think in residential, you can kind of walk down a street and, you know, see the gentrification coming,
Yeah.
or,
Yeah.
get a feeling for the type of people that live in the neighborhood, or, just simply just pull out Redfin, look at comps.
Yeah.
But you're definitely, in this business, when you're making one of the properties we're building is, it's a $14 million project.
Mm.
And you can't just go off your gut on that one. You've got to,
Yeah.
you've got to make sure you've got a few things. You
I
got
mean,
you got a few studies done, and those
yeah.
employees are time well spent, and the studies are time well spent, and the time that you take to do it is time well spent, especially since you're bringing in other people's money to
Yeah.
invest.
I was
Yeah.
gonna say, when it's your own money, you can speculate all you want to, but when it's other people's, I hope I say that right. I don't know
Yes.
what's going on today. I'm sitting here thinking
No, you got it.
Ernest is gonna kill me because I forgot his name. Ernest Harbin. I
Oh, Ernest. Yep.
apologize, sir. Yeah, that's his line. He gave that to me on a recent podcast recording. Ernest, I apologize, sir. I'm gonna buy you a beer the next time, or actually when we meet in person finally. So Ernest, I apologize. I'm gonna have to give you a shout out on one of the outtakes. So for doing that, but yeah, it's one of those things where um, there's more money out there than there is sense, right? And we are seeing that all along the Florida Panhandle. People buying up properties. I underwrote a property. Now I'm a conservative. We talked about being a conservative earlier. I am as probably conservative as they come when it comes to underwriting property, because there's other people's money involved in it. And I don't want to ever have a capital call or, God forbid, lose their money. But things just do not make sense right now. And I'm sitting here trying, I talked to a Fannie Freddie lender last week, and I said, help me understand, what are you seeing on your side of the fence? And because right now what I'm seeing, either A, people don't care about cash flow, right? They're looking for a tax write-off. B, they don't know what in the hell they're doing. Or C, I don't know what I'm doing, right? And she said, well, she goes, I'll tell you this. She goes, we had a small virtual symposium, whatnot. We had 4 of the best multifamily operators on the panel, operate all over the nation. And the question was, hey, how are you getting funding for these deals? Because with the new regulations, you got to have, right now is changing weekly here recently, but you have to have 12 months of P&I, and then you have to have some sort of somewhere between 12 and 18 months of operating expenses. And when you
Right.
underwrite those deals, the returns are just horrible. I mean, they're in most places they're non-existent. So they, the question was asked, how do you guys get funding for these deals? And this Fannie and Freddie lender says, here's the short version of that answer. They're not buying right now. So I was like, okay, well, that makes me feel better. She goes, yeah, the guys who really know what they're doing and been in it for a while, they are not simply buying multifamily residential. They are waiting for things to turn, right?
Yeah.
That's why, and I talked about this in the mastermind the other night, is when market doesn't start to make sense, I stop investing. But then I start looking and educate myself on other stuff, right? Is it a time to flip or wholesale, which I don't know anything about any of those either. Or I love the passive income piece, right? I'm a LP on a couple of different deals. I don't have any self storage in my portfolio, and from Masha's presentation on that, I was like, man, I got to get me some self storage. So, and it is one of those things. And so here's my next question for you, and I'm going to stop rambling. Is why is self storage? Because she made this claim too. You just said it yourself. Is that self storage through the last two recessions was the best performing asset, and it in some cases you can probably back this up. Is it even doubled what multifamily was doing on returns, or some there was some multiple, right? Why is that? Why is self storage so recession resistant?
Yeah. So, I have a single family home that's behind in rent. That's the only one I have. I just got rid of all my single family rentals. Thank God.
Right.
This is not
Good
something
timing, by the way.
yeah. But the thing is about storage is three things, in my opinion. One, you have collateral against the person's belongings.
Mm.
So if they don't pay, you can auction off their belongings for a profit. You can't do that in residential. You can't. I mean, I'm not saying this isn't a bash on residential. I invest passively in multifamily, love it, right? But you can't, imagine if you're a tenant and your single family home doesn't pay, you just say, okay, well, I'm just going to put everything in your house for auction, and I'm going to sell everything in your house online, and anything I make on it, I'll make up for any money that I'm out of pocket to get you out of here, right? Not going to happen.
Yeah.
Right. In storage, you can do that. So if people quit paying, you can say, okay, no problem. You don't have to pay. But we're going to put your stuff up for auction. You can do that within 30 to 60 days.
Yeah.
So I'd probably say that's probably one of the leading things. And that's because we have a lease that has lien rights on it. So you can put your stuff in our property at risk. If you don't pay, we have the ability to lien it.
Yeah.
Yeah.
And it's one of those things where you talk about the eviction process earlier, or your three criteria, easy to evict. Either you go in and you put your locks on there, right? Or they, before you're able to do that, they come in, they take all their stuff and they move out. Right.
So the third day that you don't pay, you can't even get into the property.
I got you. You got the little. So you make it real hard for them to.
I mean,
to come
if you don't, I mean, imagine you didn't pay your rent on a single family home or a multifamily property.
Oh man.
And the third day you didn't pay your rent, all of a sudden a little deadbolt just went and closed, and you can't get into your house.
Can't get.
I mean, what would you do? You would pay.
Right? You'd have to come up with something, right, to get access back in, at least for a day. It's
come up with full month's rent and any back pay. Yeah,
there you go.
So I mean, that's the reality, right? So like, you can't do that in residential. So I know that the argument is like, well, people don't live there, so aren't they just going to kind of neglect what they have there? But it's like, that's what happens if. And we don't even have to do any. We don't even have. It's not like somebody's sitting there like looking at who hasn't paid, and you have to like think about who you're locking out. The system just does it automatically.
Got automated systems. Awesome.
Yeah.
Hey, since we are in the COVID era, there's a lot, depending on what municipality you're in. Most every state has some sort of
doesn't apply
renter relief. You guys can evict people regardless, right?
Yep.
That is freaking awesome.
Doesn't apply.
That makes me even more excited about self storage, because I mean, this is
Listen, it doesn't mean that we're insensitive. I mean, what we did.
Right. There's a difference.
And so, the state, so the associations of storage are very good stewards of being, good stewards of the business, and, being ethical and reasonable. So our stance on it was, we're not going to, if somebody has been on time, and they have a hardship, we're going to take care of them. But if you're chronically late every month, and now you're continuing to be chronically late, okay, we're going to be a little less, patient. But if you've been our customer for a long time, and you fell on some hard times because of COVID, absolutely, we're going to take care of you. Yeah. We did not do any rental increases. Again, it's just a sensitivity of what, our world and our country is going through.
Right.
So we did take that precaution and that extra step. And, we offered first responders, free rent, and we did a lot of things to sort of help. But as far as like the community coming down and saying you can't kick this crappy tenant
Yeah.
out or whatever, I mean, we didn't have any of those
Yeah.
restrictions. Yeah.
And you being an airline pilot, I know a couple of those, and something about you guys, you always seem to have a very calm demeanor about you. You don't make rash decisions, and I think it comes to your training, right? Is because
It does. Yeah.
you can't make irrational, just knee-jerk reaction decisions, because it literally could be life and death in the vehicle. But so I think you have that for your advantage. One of the things that attracts me to want to partner with you, because I'm like, all right, this guy's number one, he's an airline pilot. He's going to look at a situation and he's going to collect all the data he can to make sure it's a good investment before he takes it on. But one of the things I want to ask you is, well, two questions, and then we'll wrap up. But first question is, what scares you the most about self-storage?
What scares me the most? That's a good question. I don't really know.
There has to be something, and it could just be that one little, and it doesn't even have to be like a 10 on the scary meter. It's just what scares you the most, about the asset class, about kind of what you see day to day.
As a uneducated or new investor in storage, you might think, I don't use storage. I don't get it. I don't get, I don't get the industry, right? So you might think, I don't understand why this is a $38 billion industry, or why 1 in every 10 people in the United States rent it. And I went to Europe and nobody has it over there. So what is this an American thing, or what's the deal? And being a owner of multiple facilities now, it makes a lot more sense to me, because it's not just about the person with too much stuff. It's not the person that doesn't know how to hide boxes on Amazon from their spouse, right, or whatever, right? It's there's a lot more to it than that.
You're not speaking from personal experience on the Amazon thing, are you?
Exactly. But I mean, like, we have Little League baseball teams that need a locker. We have people who do home renovations, people who run Amazon, Etsy businesses, dog walkers, the Chamber of Commerce, judges, newspaper distribution companies, food distribution companies, sheet metal contractors, general contractors, people that are renovating their house. But really, the second thing that makes storage, so attractive is it depends on life events, age, relocation, divorce, downsizing, job relocation, things like that. All those things are storage triggers. And, I think that, it's not just this, overabundance of stuff that somebody has. And magically one day they're going to watch Marie Kondo and have a revolution that they just need to get rid of everything. And, what does she say? If it doesn't bring you joy or doesn't bring you happiness, get rid of it, It's not just that. It's life, and people need storage because of their life, their life happenings.
Yeah.
And, so I think when you have a growing economy, you have the expansion of things and the expansion of businesses that rely on storage. And when you have the shrinking of the economy, you have the change that develops so many different storage transactions, because you have people that need it. I mean, I moved last year. I sold my smaller house and I bought a bigger house, and I had to put my stuff somewhere while I was going through the process of selling my house and buying a new house. And a pod on the street just didn't really work. Plus, those get stored in storage facilities anyway.
Yeah, I was going to say,
those are
storage containers, right? For the storage facility. So it's
yeah. And so like I put my stuff up in a storage. I loved it because I got to go through somebody else's process and kind of see what they did and what they didn't do. But
you didn't own the property where you put your storage in?
No, I don't. Yeah, it was like the one like right down the street. It's cool though. It was an extra space. They did a good job.
Well, no, you're talking exactly, to the market, is that you were not willing to drive 5 miles outside of your house or your your dwelling to be able to
I was the
storage,
perfect, yep. And it was a
store your
life
stuff.
event. We were
Yeah.
having a baby.
Yeah.
You know, we have
Congratulations,
a,
by the
thank
way.
you. Yeah, we had a daughter, and then now we were having a son. And it was, now our family's getting bigger. We need a bigger house, so we needed to
Yeah.
move. So moving required putting stuff in storage. So again,
Yeah.
it's tied to the life events. The other thing that, you know, people might say is, I've heard about clutter and all these disruptors in the storage business that are, they come to your house and they get your stuff and they like go put it somewhere. Are those going to disrupt the space and stuff like that? And that has been going on for decades, you know,
Mm,
of this kind of white glove, you know, hey, you know, push a button, they come to your house, you know, so I
yeah.
want to put all this stuff in storage and they take it away. It just, it might be a thing, but
Mm,
it isn't yet.
yeah.
Just because it's expensive to do that, and you know, it doesn't really work in secondary and tertiary markets where we're primarily focused. You know, that's where we focus on. We
Gotcha.
focus on the suburbs. We focus on the outskirts. We don't focus on the core cities, and that's playing very favorable right now,
Yeah.
especially with COVID and people not wanting to be in city
Yeah.
cores. But that's where all the REITs compete, and it's a bloodbath in competition. So we look in the secondary, tertiary markets where it's
Yeah.
where we can be the most sophisticated investor or sophisticated operator in a particular market.
Yeah.
So,
Well, one of those life events, you know, just to kind of run parallel with what is happening right now, you know, there are a lot of folks in forbearance right now on their primary mortgage because the economy was good, the job was good, then they got laid off. So they're probably going to have to, you know, and in that period of time, they got that bigger space. They were adding to all this stuff, right?
yep.
And now they're probably going to do some contraction if they follow along with what the economy is going to do. So they have two options, right? Or three, really: sell it, trash it, or put it in self storage.
Yep.
Right, is to put all that stuff. So I imagine, and with you guys, and this is one of the things that really makes me excited about potentially working with you and just self storage in general, is that the, you know, there is a great flight from the big cities. You know, people are
Yep.
moving out of the cities into suburban areas now, because of not only COVID but all the other crap that's been going on the last
Yep.
couple months. And
Affordability. Yep.
yeah, and it seems like you guys are in a perfect spot. It's one of those things where, man, I look at it right now, I'm like, man, I wish I would have done this. I wish I would have been educating
4 years
myself
ago.
on,
Yeah.
on self storage 4 years ago, and not just be a consumer, but it be somebody who knows a little bit more about it. And yeah, I think you guys are right in a perfect spot for what's going to
I hope so.
happen. You know, and speaking of, do you have any? I ask almost everybody who's done an episode here in the last month or so, what does your crystal ball tell you where we're going with the economy, right? Or should I
So I
say
think,
your business development person and her
yeah,
two
yeah, that'd
employees?
be a
What does
better,
she say?
she'd speak better to that.
Yeah.
Personally, I think that the election is going to be a big deal.
Yeah.
It's going to be a
Yeah.
big deal. I don't want to, you know, I'm not going to get into my politics, but
Yeah. Yeah.
you know, Donald Trump gets reelected, there's going to be some pretty mad people.
Yeah.
I think if Biden gets it, probably less mad people, but still just you know, you know, emotion in the stock market is gonna hit the stock market pretty bad, and you know, policies are going to be undone, and you know, so I think the election is going to be a big deal. I also think that the government has propped up any economic success that we've had in the last 3 months.
2 3 months.
Right,
Yeah.
2 or 3 months. Yeah. So
I
people,
agree
you
with
know,
that.
everybody's saying, "Oh, my rent collections are great. My delinquencies are great. Everything's great. Everything's great." Guess what? The government has been handing everybody money.
Yeah.
You know, not
Yeah.
everybody, right? Not everybody equally, but people have been getting stipend checks. Businesses have been getting bailouts to keep employees on staff.
Yeah.
You know, PPP has been handed out. The government essentially turned local banks into unemployment, right? I mean,
Branches.
basically
Yep.
they've taken it. They took this big chunk of money, they handed it to banks and said, "Go deploy this money so nobody lays anybody off." They have essentially put a Band-Aid on that. Will there be a second round of PPP? I don't know, but they're talking about it.
Yeah.
And
We'll know
yeah,
probably by the time this comes out. We'll know kind of what's happening. So this is, you know, we're recording this middle of July, and it'll come out probably middle of August, when hopefully the two sides have come together and figured out
yeah.
what's going to go
I mean,
on. But
$3+ trillion being pumped into this mess. It's a
And it's not
cover up.
over. Yeah.
It's not over. Yeah.
it's not
And so
over.
I would just be, personally, what I've done is I've refinanced. I'm sure everybody's listening is pretty much refinanced,
I don't
cut
know. Let's
expenses.
throw this out there. If you have not refinanced, now is an amazing time to
Yes.
refinance and get. I saw a rate like 2.75 for some guy who posted online. He's bragging about it, which he should, right? So if you have not refinanced your primary residence or any investments that you have, now is a time to lock in ridiculously.
And
And I hate
yeah.
saying this because I feel like a damn infomercial right now, but for years you've been hearing the radio ads. Now historic lows, historic
hmm
lows. We're
And
still
here's the other
here,
thing.
right?
If you've got lines of credit, you need to draw on those lines of credit because,
Mm,
look at Ford Motor Company. Ford Motor Company during the last downturn, they were the only of the big three that drew on their lines of credit. And then when the lines of credit dried up, they had the capital where the other auto manufacturers did not.
yep.
So that's why they were able to save, bankruptcy,
Yeah.
was because of that, right? So, lines of credit exist today, they won't exist in the future.
Yeah.
So think about your long-term debt strategy and going into the fall with being ready to take
Yeah.
a beating. Because I think depending on I thought this was going to happen a lot sooner, but then I didn't expect the Fed to basically bail everybody out. It's like,
Yeah.
holy cow, and somebody's going to have to pay for this at some point, right? I mean, we're going to get increases in taxes. So I think you might see that with the Democratic potential
Mm-hmm.
presidential election. You're going to have to, somebody's going to have to pick up this bill. That, or with the lowering of interest rates and the weakening of the U.S. dollar, you might see less investment in the U.S. dollar. You might see a potential currency issue, right? Or so I think there's a lot of things sort of up in the air. But obviously you can only focus on you.
Yeah.
And I would be thinking about inflation. I would be thinking about getting your assets invested in something that hedges inflation, cutting expenses, and just preparing for kind of the next year of just sort of being a kind of a flaky market.
Yeah.
Frankly.
Yeah. And for those of you listening, and I'm new to this as well, is like, why should we draw on our lines of credit now, right? The main reason is because if you're around in 2008, and I didn't know this, or it didn't really have any lines of credit worthwhile, but the banks can start pulling those back if they're untapped or unused. So we're here in the last several years where it's been real easy to just to call up your bank or call up your credit card company and say, hey, increase my line of credit. Chances are here in the next, I don't know, year or so, they're gonna say they're either gonna deny that, or probably more importantly, and I think this is where your advice comes from, is they're gonna say we have to lower your credit, right?
Or freeze it.
Or freeze it. You can't use it
Yeah, and
anymore.
I mean, I won't go into the circumstances. It wasn't anything personal with me, but I've had that happen.
Mm.
I've had a HELOC where I thought there was 150,000 to draw on, and then I got a letter in the mail saying you have no more HELOC. So a lot of people go get a HELOC and they think that that's their protection.
Yeah.
If it's not drawn upon, it doesn't exist necessarily. So don't rely on it like that.
Yeah.
In my case, it was because the lender was lending based on me living in the residence, and I didn't know that there was a nuance where if you moved out of the residence, so they sent me a letter saying, hey, it's gone. And so sure, it wasn't an evaporation of credits like in the last downturn, but it
Right.
in the last downturn that happened to a lot of people.
Yeah.
And their emergency funds were lines of credit that they thought were there, but then all of a sudden the bank sent the letter and saying, hey, you don't have it anymore, sorry.
Yeah. Yeah. And inflation is something I don't know a whole lot about. I've given myself some homework for the last couple of weeks. Hey, you need to, I need to ask more about what is inflation? What does it mean? What does it mean when the government pumps in $3 trillion, right? And what I think is going to be I think $3 trillion is probably going to be small compared to what they're going to come up with between now and before this is all over with, right? We're sitting here thinking, man, $3 trillion is a lot. That's a huge number. It is. Don't get me wrong. I don't think it's the end of the, I don't want to say handouts, but the attempted financial recovery, right? And what does that mean for down the road? When are we going to see this actually hit inflation? When is it going to start happening? Is it already happening and we just don't know it? I mean, it seems
Well,
like,
if you think about our parents, right? Our parents always talk about the double digit interest rates that they had,
yeah,
but they also paid less money for their homes,
yeah, that's true.
right? So
That's
when you
true.
look at it, when you pump more money, you make more money available to the market, you're going to drive prices,
Mm,
right? So when there's more money available, then there is a higher price for the asset,
yeah,
right? And at the lower interest rate, more money is available because if I have to cover my debt service on a 3% loan versus a 10% loan, I can, that property, somebody's willing to pay a higher price for it. So you have
yeah,
inflation.
yeah,
And so I think, it's all, there's always, it's like, oh, wow, I can borrow at 3%. It's like, well, my parents could, it was 10% or 12% or even 15%. Right. And
yeah,
they said
yeah,
anything with single digits where it was good, but the price was also matching that.
yeah,
Right. So,
yeah,
I think the reality is that, we're in a situation where money's cheap, money's being pumped into the economy, and you're going to see that inflation. You're going to see prices continuing to go up,
yeah,
with no end in sight. And in particular, in storage, it's very difficult to find a good project right now. If you have a good project and you think it's a good project, definitely double check your numbers. Make sure you've checked everything, because it's a difficult it's a difficult asset to acquire right now, because people know that this disruption in the market is coming,
mm,
and they know that's when storage usually performs the best.
mm.
So there's not a lot of distressed sellers in storage. Nobody's
Yeah.
waiting for the perfect timing, because this is when storage does well. So people are actually just quite the opposite. They're buying storage.
Yeah.
So our pipeline has dried up quite a bit for acquisitions. We do have an offering now, but we don't have much in the pipeline. We're really having to reevaluate. We do have full-time acquisitions personnel. We have two people
Yeah.
that all they do is, Ben and Tyler, all they do is look for properties. But it's getting more difficult
Yeah.
because there's just less available on the market, and there's not this big fire sale of self
Yeah.
storages. So, and there probably won't be.
For a
Yeah,
while, right?
yeah,
For
oh yeah,
well, so on that note, if a guy like me or anybody listening or watching wants to partner with you or learn about your deals, what's the best way to contact you about those, and then what should we be expecting as a potential partner?
yeah. So the best way to get in touch is Ryan at
And I'm
Spartan.
asking for sorry, I didn't mean to cut you
Yeah,
off. It
yeah,
sounded a
yeah.
lot like a commercial, but I am genuinely asking because, I were
Sure.
chatting. I did fill out your investor form on your website right
Yeah,
before
no,
we.
I
I was
saw it
like,
come through. Yeah,
man, I got to get into this self-storage space. But so I am asking genuinely. So if anybody else is listening or watching, you want to get into self-storage or understand more, how you can get in touch with Ryan. But I am interested in finding a deal. So what does that process look like?
yeah. It's pretty simple for us. You just go to Spartan-investors.com. And like you said, there's the Invest Now button, and you just fill out
Yeah.
the form, and then you're on our list. You're going to get our offerings, our newsletters. We do solicitations under 506C and 506B. So sometimes you have to be accredited, sometimes you don't have to be accredited. So
Gotcha.
the non-accredited deals, you have to have a relationship with us. So you got to know us, and we have to understand your level of sophistication. The
Yeah.
accredited deals, you got to be accredited, and those are the deals that we can advertise.
And
But generally, what we do is we just offer a part of the ownership in the business. So
mm,
you can own you know XYZ storage. You can own a percentage of it. You get usually a preferred rate of return. So you get the first profits from the investment,
yep.
and you get something like pretty close to 2x on a 5-year hold with
That's
on
awesome.
your money. So
Yeah.
you get all the depreciation. You get pretty much. It's kind of like owning your own storage, but you don't have to do any of the work, and you don't have to rely on your gut for just picking a market. You don't have to
You don't have
come
to
up with
make all
million.
the mistakes
Exactly.
you can rely on your experience, and
Yep.
that's what I'm looking for sure is, hey, here's some money I have sitting aside. It's getting bored. I'm getting bored sitting here watching it doing nothing except decline in value. So
Yep.
yeah, I definitely interested in talking to you about that. You mentioned something there that comes up a lot in syndications, whether it be self-storage or multifamily, is if it's a sophisticated investor, not accredited, what does it actually mean to build a relationship, right? And I
Yeah.
have my own definition. This is why that law is written the way it is, because it's open for interpretation. But what do I need to do for you guys to be satisfied with saying, okay, we have a relationship with Jay? Um, we're okay with presenting him with this opportunity when one comes up.
So let me set the stage for just a little bit for people who are thinking about setting up their process or already have a process in place.
Yeah.
The problem is problem investors. It's really got nothing to do. I mean, the sophistication, you could say, well, my attorney said this and my attorney said that. And if you read the law and look at the no action letters, at the end of the day, it's like, do I want to be in a partnership with you?
Yeah.
Are you going to be a problem? Right? Do you understand that you are risking, and this goes for every single syndication out there, whether it be debt, equity, mezz, anything in between, whatever. Do you understand that you can lose all of your money in this deal? And I tell all of my investors that. Do you understand you can lose all of your money? There's no guarantees in life, and this is certainly not a guarantee.
Not one of them. Yep.
And this is definitely not a once in a lifetime opportunity. None of these deals are. No one has a once in a lifetime opportunity deal ever. So with that out of the way, I'm very kind of dark about it because I want people to really kind of, okay, now we know where the floor is. Let's talk. Now let's build up and talk about the opportunity and what we could earn and things like that. So it's as much as making sure you're vetting your investor to make sure that they understand the risks and, to sort of, I mean, you never can know. It's like, I always give the analogy, you and your buddies are all going on a road trip, right? And you're all having fun. So everybody, my buddy grabs a 6-pack, everybody's getting in the car, and then you're halfway to the mountains and the car runs out of gas. And now you know who your friends are, right?
Yeah.
Right?
That's a pretty good analogy.
Who could you call, right? Who's going to be a complete, a-hole about the whole thing? Like, who's going to push, who's going to start running to the gas station with, who's resourceful, right? And it's kind of like that in investing. You kind of want to make sure that the people you're bringing on board truly understand what they're signing up for.
Yeah.
This is a non-liquid investment. It's not like, the nice thing about real estate is you're not in the stock market. The nice thing about the stock market is you're not in real estate. If you want to push a button and sell your share because you don't like this company anymore because of something they said or something they did or their cash position, it's gone. You get all your money back, right? But if this deal isn't going very well and you don't like the opportunity, you can't just push a button. So I think sophistication is really just understanding the opportunity and the deal, the risks associated with it, and making sure that the person can come on board. There's interpretations on time. Well, how much time do you have to know the person, right? How much, and all that. I give less merit to that and more merit to the understanding of the risk that the person is taking. Do I feel as a Spartan that this investor understands what they're about to do? Or are they just blinded by the light? They just can't wait to make all this money.
Yeah.
And they just, they saw your amazing presentation and they're jumping on because, like you said, if people have, what was the quote that Ernest said?
More money than there is sense.
There you go. Right. Yeah. Money makes the blind man see.
Yeah.
Right. They're attracted to the return. All they see is this amazing return, this awesome presentation. And they're just coming in and they're just giving you whatever they want. Kind of the dumb money. Right.
Yeah.
So I like to make sure that a sophisticated investor understands how the deal is structured, how they get paid, and what their risks are. And I think if I am confident that they understand that, then I deem them sophisticated. Now, technically, we send everybody through the same process to answer your question. So they fill out the form. They fill out an investor qualification form where they answer about 10 questions. If anybody wants to see what those 10 questions are, go to our website. You can see our questionnaire. How much do you earn? What's your net worth? Et cetera. And then we do a call, right? Yeah. And this would probably satisfy our call because it's, right? Where I just gave you my disclaimers. And,
there you go.
and I know, hey, this guy puts on a real estate podcast.
Yeah.
This guy runs a real estate forum. This guy has invested in multiple syndications. He has multiple properties, right? He has demonstrated that he has sophistication in this space or he has experience in this space. The last thing that we do is so now that we have this relationship, the last thing that we do when you do a deal, you have to fill out a purchaser questionnaire. And the questionnaire is essentially like a 3 or 4 page detailed evaluation of your experience. And this is more for, the deal goes bad. If it goes bad in like 5 years, we never had a deal go bad yet. But I'm sure sometimes something will happen, right? But so
There,
far
there's
so good.
risk, right? It's an investment. So
Absolutely. Yeah.
there's going to be one that, but your job as the syndicator is to help prevent that from as much as possible from happening. Right?
Exactly. Yeah. And that's why I always say to people, don't look at somebody's deal, look at their team, please. I mean, I
Yeah.
get the deals and all that, but I've seen some of the best amazing deals. I'm invested in a syndication, somebody else's company. It was a 9-month fast moving deal that took place 4 years ago, and the deal is still not closed yet, right? Right. 9-month deal, right? Amazing deal, right?
Yeah.
But if you don't have the team to execute,
Yeah.
you just don't,
I understand that.
right?
Yeah.
So I always say, get to know your sponsor, get to know the team that they're playing with. If there's any light that needs to be shed on any part of the business, please shine it. And those, get to know what your apprehensions are, what your doubts are, get it all answered. Background check your sponsors, check their communication, check references, and then references are always good, but you're never going to give anybody a bad reference. So,
right.
So find somebody else who's invested and get an untested,
biased. Yep.
Unbiased, right? Like, hey, I heard you. Oh, what do you think about those guys? And they didn't even refer you to that person, but now you're getting a testimony, right?
Yeah.
So,
is unbiased a word, by the way, or should it be non-biased? It should be non-biased.
So I know one thing's for sure. I'm the wrong person to ask that question.
I was going to say, usually,
I'm like the worst.
Usually airplane pilots are really good at math, which means they're really horrible at
Right. Yeah. The words. So the problem with aviation is we abbreviate everything. So we don't really know how to spell anything. Actually, it's just the opposite.
That's awesome.
But
that's good stuff. I appreciate that definition. I haven't heard it put so eloquently, defining what the relationship is. And you're right. The investors that are going to cause it, they're the painful guys anyways. You really need to know the person, right? Again, it goes to that relationship. And if you want to do business with, this is off topic, right? But if you want to do business with that person, knowing who they are, it's on you, right? It's all you. So
I have a really good example, actually.
Give it to us.
that video I just posted of the storage development.
Yeah.
I have an investor who inquired, on that deal. We didn't actually raise funds for that deal up until I think like 18 months or 2 years ago. We entitled it for 2, and then once we felt comfortable, we brought in the money. So the investor said to me, will it take exactly the time that you projected and exactly the returns that you projected? Because if it's not those 2 things, I don't want to do the deal. And, here's your opportunity, right? Red pill, blue pill. Do I say, oh no, I'm confident that it'll be those things and no problem, right? Or you say, there's no guarantee whatsoever that I'm going to hit those timelines and those returns or anything like that, right? So I chose to be more scary and say, hey, these syndications don't always work out as they're planned. They could take longer. It could cost more. We could make more money. We could make less money. You could lose your money, right? I mean, I wasn't damning to the situation, but now that the project actually, it's out of the ground now and it's going to do really well, but it's delayed. Right. So it took an extra 6 months in permitting to get the permits done, or at least 6 months. It was probably a little more like a year.
Yeah.
And, unbeknown to us, that's the reality. And I'm so glad I said that to them before they made the investment decision, because now they're part of the team. I was honest with them, right? They could go and make a noise with the SEC and do all these things, but I was honest with them and I said, hey, no, this could take longer, and there is a possibility that you won't do this well, right? You could do better, you could do worse, or you could do right on target, but there isn't a single syndication out there, I guarantee it. Well, can't guarantee it, but there isn't a single that has hit the bullseye, right? Like you say, oh, this is going to be a 17.9% return. You never can be exacting. It could be a little bit more, it could be a little bit less.
Anticipated, right? Anticipated.
Exactly. Return. So I think just knowing, getting people to understand really what they're signing up for is going to create good. And the other thing that I'll say is communicating. Giving your investors communication every month, every quarter. We do a quarterly conference call. We do a monthly email. We do it on the 15th at 5 a.m. Pacific time, every single time. because you need to, if there's something going wrong or there's a delay happening, the investor really needs to understand why.
Yep.
And you need to bring them onto your team versus alienate them and not communicate to them at all, right? Because
Yeah.
that's where you start having problems, right?
Yeah.
And yeah. So anyway, I didn't mean to ramble about that.
No,
but
no,
I think
it's good. I think it speaks to your maturity as an operator, right? Because
yeah,
there are so many people out there. I mean, I have had more conversation in the last 2 months with potential partners and other potential operators that are going to take the red pill. I think you used the blue pill is what you took. So just make sure where you said, hey, there are no guarantees. It's an investment risk. And I need that reminder too, every now and then. But there are a lot of operators right out there right now saying, yeah, it's guaranteed. They will
yeah.
say, yeah, it's going to happen on schedule and that to me is a red flag. So when you said, look,
Immediate red flag. Yeah.
when you said, hey, it's an investment, there are risks, there are no guarantees, right?
Yep.
That makes me want to do business with you even more. So,
right. And it's just so much easier. I mean, I've had a property get hit by a tornado,
and
we fully recovered in
right.
occupancy. Life is good again. But, it's just so much easier having those upfront conversations. Now, as a capital raiser, I mean, I'm going to promise you the world. People they want to promise you the world, right? Because it's like, they've got a syndication, they've got deadlines, and they've got money to raise, and they're going to say whatever the hell they want to say to give them the money. And that's just a terrible way to just, I'm speaking from experience investing in bad deals. So I'll just say that, and the people had all the hype in the world. And oh my God, I always laugh. It's amazing how nicely put together these presentations are. And then they put all this effort into selling you something that you sign up for. And then there's no effort in the project or, or the communication.
Yeah.
It's like, I know you can produce marketing materials because I've seen that. That's what I signed up for.
Yeah.
But now I can't, now I can't even get so much as an email from you.
Yeah. Tell me what's going on. Yeah.
Yeah. Oh, you've already sold me,
Yeah. I posted a very unpopular video a couple of weeks ago about now is not the time to invest. Now is the time to educate yourself. Right.
Oh, I love that.
Premise of the video was, hey,
educate
yourself. I think I saw
that.
Yeah. And I was not very clear on what I meant by that. I was specifically talking about the Panhandle of Florida in the multifamily space, but man, people came out of the woodworks telling me how wrong it was. There was people taking it extremely personal. There was some off-air comments that came through Messenger and Facebook, and they're like, man, I didn't like single-handedly call you out. I don't know why you're thinking this. But anyway, educate yourself, know about it, and don't just get hyped up about all the fluff that's going on, right? Of the marketing materials, because all that sounds good. I did have one of my mastermind members tell me, he goes, Jay, because I was asking their feedback on a course I was putting together, and they're like, well, we didn't sign up because you have really good marketing material. We signed up because of the content that we're going to get and how we're going to be able to grow. So the same thing with investing, right? You got to have their relationship. You got to understand who you're getting married to, at least for the interim. But you also need to understand that they are there to guide you through this process, right? Not just take your money and try to promise you returns. Right. Yeah. All right. Before we get out of here, you have to be a fan of the movie The 300, right?
Of course.
Yeah.
Oh, of course.
So give me your best. This is Sparta before we get out of here.
This is Sparta.
No,
the name comes from Michigan State.
Gotcha.
Two partners. So I did not go to Michigan State.
Right. I'm actually, but you're from there, right? Originally.
Yeah. But Scott went to State, and then one of our original partners, who is a passive investor now, he went to Michigan State. They were roommates. So we're all from Michigan, and it's kind of funny. It was our first flip, and we're like, what do we call our first LLC? And we're like, we're called Spartan Investment Group. And then it was like, all right, well, and we even had a little man and all this stuff. And, and it was like, after a while, we tried to change the name, but people were like, no, we just know you as Spartan.
There you go.
And so we're like, all right, fine. So we just went all in and just kept the name. So
I love it. I
yeah.
love it. Well,
I like
good
your
stuff.
logo, by the way, too. That's pretty cool.
Thank you. Thank
Yeah.
you. I
Yeah.
appreciate that.
Yeah.
Well, Ryan, I really appreciate you being here and connecting with you. Hopefully if this doesn't qualify me for our conversation, let's schedule
It does.
something, because I am seriously interested in getting involved in whatever you have going on next. Because I know for all the reasons we talked about, right? Self-storage is an asset that I want to have in my portfolio, either through you guys, and if I find a deal that is where I'm not looking for any right now, but if one just happens to come across my plate, I know you're one of two people I'm going to send it to. So
Awesome.
but thank you for your time today. I really do appreciate it, and we'll connect again very soon.
Sounds good. Thanks, Jay.
Hey, thank you for watching here on YouTube. When I hung up with Ryan, I let him know that one of the things I do for everybody who comes on the show, or most everybody that comes on the show, is I send them one of our super comfy t-shirts. So I want to offer you something too. I've got a promo code. It's just YouTube, right? It's where you found us. If you go to w2capitalist.com and click on the store button, you're going to go to our store, you're going to go to our shop, and you can get 15% off all of our swag there just by using the promo code YouTube, YOUTUBE. So I want to offer that for you to hanging out with us today. Hopefully you found something incredible about today. And if you did, hit the like button, give us a really good comment. And the other thing I want to encourage you to, if you've been thinking about adding self-storage to your portfolio, go check out Ryan and get involved with him at Spartan-investors.com. I certainly did it. I was complimenting on their website. It's very appealing, very attractive. I definitely need to take some notes, or maybe just hire, if they outsourced it, hire whoever they did, because it is incredible website. But go check them out, Spartan-investors.com, and we'll see you next week.